If you blagged a bounce back loan, you haven't repaid it, and you think you can just ignore the government, I've got some bad news for you. The Public Sector Fraud Authority already has a list of names, a list of red flags, and once the new Fraud, Error and Recovery Bill becomes law, they're going to have even more powers to come after you. I speak to directors every single day who say, I didn't realise what I did was wrong. I just applied for it because everyone else did. Dave told me down the pub. Now here's the truth. Ignorance is not going to protect you. Behind the scenes, there's been data matching, there's been investigations, and it's been going on for years. And the government is about to step things up. So in this video, I'm going to explain why the bounce back loan crackdown is intensifying, the red flags that trigger investigations, the types of punishments directors are already facing, and what you must do now if you are worried. Okay. By the end, you're going to understand exactly how serious this problem is, and you're going to know to a degree how to protect yourself before it's too late. So, nearly £47 billion was handed out under the bounce back loan scheme. Billions are now being flagged as fraud or error, and the government has been using HMRC data, companies' house filings and bank information to track red flags. Now, there's a new law. The Fraud, Error and Recovery Bill will soon give investigators even more power. They can chase loans for up to 12 years, they can issue recovery notices quickly, they can seize funds directly from bank accounts, and they can impose severe civil penalties. Now this means the government won't need long investigations or court battles anymore. Recovery is going to be faster and tougher. Now this isn't theoretical. Directors are already being banned, fined or handed suspended sentences for bounce back loan fraud. Now the red flags are real and the punishments are actually happening now. So let's dig into the red flags. Here are the main red flags the government is using to identify misuse. Right, flag number one, not trading on March the 1st, 2020. Businesses that weren't genuinely operating when loans were applied for, okay? Companies who were already in liquidation or had they been dissolved when they took out the loan. Loans taken out for entities that technically didn't exist. That's going to get you into trouble. If you file dormant accounts, so if a company was marked dormant but it still took a loan, big red flag. Rapid dissolutions. So trying to close a company within months of drawing down the loan via a strike-off. Obviously, this is the big one, inflated turnover. You was entitled to claim 25% of 2019's turnover, capped at 50,000. Lots of people claimed far higher than the 2019 figures, and they think, well, I was able to estimate the figure. You could only estimate that figure if you was incorporated after the 1st of Jan 2019. Another thing people are looking for is multiple loans. If you took more than one bounce back loan per business or business group, you're in trouble because only one was permitted. Another thing that's a red flag is using the bounce back loan personally. And what we're talking about here, let me be clear, if you've used that loan over the course of a few years, if you've drawn it as salary or you've took it as drawings, they're not focusing on that. They're focusing on people who took 50 grand on the Monday and on the Tuesday they sent it to the personal bank account or they withdrew it in cash. Another issue is no trading activity after the loan was taken. So that could be accounts with no staff costs, no tax pays or minimal genuine transactions. Another big red flag is cash withdrawals. So you took the money and then you started to make massive cash withdrawals over a period of time with no clear business purposes. Another thing that's come to light is false documentation. Submitting fake invoices or trading records to prove eligibility when in actual fact the business were dormant. Now if any of these apply, you are on the radar. Data matching has already flagged these cases and the letters and actions are just a matter of time. Now let's talk about what are the consequences, because the punishments directors are facing, we all know about director bans, anywhere from 3 to 12 years. What we're also seeing for the most severe cases is suspended prison sentence or prison sentences. We've seen fines and repayment demands. We're going to start to see community service curfews, and in some cases there's going to be immediate bankruptcy. And once the new bill becomes law, The government's going to add driving bans, civil recovery orders and fast-track debt collection. The toolkit is about to get harsher. So what should you do if you took a bounce back loan and you're worried? Listen, step one, review it honestly. Did your business really meet the rules? Was your turnover inflated? Was the money used properly? Step two, don't ignore it. Do not ignore repayment. Don't bury your head in the sand. If you can't afford the full repayments, set up an affordable plan with the bank or the debt collectors. Doing nothing is the worst option because it paints you as someone who's deliberately dodging consequences. Step three, pick the phone up. If you know you have triggered a red flag, speak to the bank, speak to the debt collection company and give them your best possible offer. What you don't really want to be doing if you've done any of these red flags, if you go through an insolvency process, it's going to open Pandora's box. If anything I've said for you today, please don't call us because we can't help you other than what we've given you on the phone, right? Sorry, what we've given you on this video. The message is if you've done something wrong, you've got to pay it back, even if it's over some extended timescales. So what's happening? Just to recap. The government has identified a list of red flags around bounce back loan abuse and they've already started punishing directors. With new powers coming soon, chasing repayments is going to be faster, tougher and more aggressive. The message is simple. If you blagged a bounce back loan and you think you can just walk away, you are wrong. The government is coming. So if you're a UK director worried about bounce back loan, please don't bury your head in the sand. I'm going to direct you to another playlist that we've done here. This is going to tell you everything that you need to know about bounce back loans. I hope you found the video useful. Thanks for your time. Bye bye.